Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently down 6.19% to 39,591. Ethereum down 7.01% to 2980. Please let me know in the comments how you're feeling about today. There's a lot of red in the market. Are you feeling confident? Are you feeling otherwise? Please let us know. I just did a quick look through social media and a lot of commentators are saying, oh, this is really bad. But how bad actually is it? There are two ways to look at the market. One is from a professional, smart money perspective. The other one is from a retail, reactive perspective. When people look at this market, if they don't have the skills, they would be terrified, absolutely. The question is, what is actually happening here? How red is it going to get? The only realistic way to know that is to stack probabilities. Collecting probabilities is incredibly important to being a professional. Crypto technical analysts scientifically track investor attention. They look towards the charts and they mark them up. If you don't do this, you don't know where price has a ceiling or has a floor. Then they look to outside trends. They check the stock markets, world events, collect probabilities. And I'm going to show you really quickly how important that is. Then they look into the crypto market, finding the market's focus, understanding that opportunities reset daily. They have their mindset correct. They have mastered emotional control. They're fighting self-doubt and self-sabotage with a real wealth, positive excellence life trend perspective, and that is incredibly important. Then they look at buying and selling. This is the professional mindset. Mindset and rules will actually dictate your profitability, and crypto trading and investing is one of the highest paid professions in the world, but you must have the knowledge. We can say that the medical profession is very highly paid. Accountants, lawyers, engineers, computer scientists, but they all study really hard. And so must you if you want to extract the value out of the market. Rule 225, Bitcoin cannot escape the stock market's gravity. Yesterday, I spoke about where the VIX needs to go and what could happen to the Nasdaq 100. We've seen the VIX hasn't spiked up enough yet. We may have some more downside action, but I think it's going to be really shortly lived. The VIX is the fear gauge of the stock market. So why do we look at the stock market? We're in crypto. The short answer is the stock market drives Bitcoin and Bitcoin drives the alts. Have a look at this. I just wanted to push this out to you to show you something interesting. What would you feel if you were in the crypto market just down here, 23rd of Feb, when everything was selling off? It's the end of the world, right? You would see all of these kind of thumbnails if you looked at YouTube. But actually, what happened next? Hello. That's not supposed to happen. Isn't it supposed to go to zero? What happened next after that? Oh, ouch. This is Bitcoin. Crypto is so incredibly volatile. I've been involved with financial markets for more than 3 decades. I'm trained as a financial analyst, and I'm a former lecturer in first and second year statistics. All of these things play statistically from a probability stance. What happened next? People were looking at Bitcoin coming down, and of course Bitcoin's gravity, no alt can escape it, so all the alts were getting crushed as Bitcoin was coming down. When things recovered, everything rallied. So what were people saying? Fantastic, it's going to the moon. Oh, what happened? You can see price is always moving in a wave. As a crypto technical analyst, you always have your rules. They're very important. What you can see is price going up and down. These long slants in the Nasdaq 100 show weekend trading. There is none in the stock market. The stock market's really boring. Just to confirm, this white line is the Nasdaq 100. This is the weekend. They're closed. So you can see the weekend indicator that we share in the masterclass. What we can see here is the Nasdaq 100 is influencing Bitcoin's gravity. Now what's happening now? Now we're coming up to current price action. And what are people doing now? Again, it's the end of the world. It's not the end of the world. It's just another day. We have many rules that govern our behavior, and what you can see is that the Nasdaq, the gravity of the stock market, was pushing down crypto. And what do we see here now? We've reached the E area. Please note that I put this projection in basically 16 days ago. I was trying to explain to people that it would be really healthy if Bitcoin retraced to here, and that's the entire crypto market. When markets get out of control, when they go up too much, they collapse. We do not want that. There's a little bit more to this. We need to call the shorts into the market. And mission accomplished, the shorts are starting to come back into the market. They've been absent for quite a long time. We had a considerable drop-off in long behavior. Now the longs are starting to come back into the market as well. This is really good. This is very, very healthy. Beware of thumbnails. This kind of thing may actually get people to look at a particular video, but it's not good for your pocket. Even though I really love some of these guys. They're really cool. So getting back to it, in yesterday's video, the Nasdaq 100 was actually above this particular shaded area that I put in. A retracement down to here is really good, and you can see the fear spiking up. I would have expected the fear to spike up more, but hey, this is the market. This is what we get. The important thing to always keep in mind is your philosophy. If you are seeking certainty, if you absolutely have to have certain things happen, you will get crushed by the market. It is an unfortunate truth. But if you're seeking probabilities, you'll do really, really well. That is what we focus on. Probabilities is the professional mindset. So we have had our retracement into this area. A lot of people are becoming really, really certain that the markets are going to sell off, that there's going to be a crash, that $0 Bitcoin and $0 Nasdaq and $0 everything is coming. What has actually happened here? We've had a really, really good rally up on the Nasdaq, and we know that Bitcoin is influenced by the Nasdaq. It can't escape the gravity of the stock market. We've had a simple retracement. Everybody's running for the hills, and that's because they're thinking from a retail mindset. Smart money doesn't think this way at all. We expect these things. For example, when gold was spiking on Russia's invasion of Ukraine, it became unsustainably high. This is geopolitical risk as measured by gold. I was just warning people, please beware. It's going to retrace. It's gone too far, too high, too long, and it's going to collapse down. And that's exactly what it did. I said exactly the same thing for oil, and it collapsed over 25%. These things are really, really important to understand. We can see economic concern is decreasing, but this is due for a bounce back. We can see yields, risk on behavior, that is exponentially increasing. This is due for a pullback. We can see the US dollar currency index. It's escaping from its resistance level. It could come back and retest very, very sensibly. And as I said before, gold is in a long-term uptrend. All of these things impact Bitcoin. And you can see it in Bitcoin's chart. It's as clear as day. This is the Nasdaq 100. The Nasdaq 100 sold down. Bitcoin sold down. Looking to liquidations, across the past 24 hours, there's been $454.99 million across 145,933 positions. This caught a lot of people off guard, and mainly the longs. About 90% of liquidations were long liquidations. And you can see, wow, that's a pretty good amount of liquidations. But the shorts were also getting liquidated. Please, friends don't let friends leverage trade. Please go and buy at spot. Don't use leverage, because if you do, you can actually get liquidated in both directions. It's really, really dangerous. The key thing that we do as crypto technical analysts, we make in advance probabilistic choices. We know what we will do if price goes down, goes up, or goes sideways. We have our strategies in play, and we're already predicting where things can go. Looking at the crypto fear and greed index, we can see the fear is starting to come out of the market. That does sound really strange, doesn't it? Let's look at the market. It's strange to say that the fear is coming out of the market. It's so red. And if we look at Coin 360, which has been known to throw a wobbly from time to time, this is also looking really, really red as well. Please let me know in the comments if you don't know what BORSOG means. Masterclass students get a copy of my charts. You'll get this in TM6 for the stock market. We have to also collect probabilities. So looking at the 10-year and the 5-year break-even inflation rate, inflation is surging within the US economy. We can see the Fed balance sheet has decreased slightly, but just slightly, not too much. The Nasdaq, as we saw, is selling off to a level of support. This is just a natural movement, price moving in a wave, rule 4. That's why we need our rules. If we don't have our rules, we sell at the wrong times. That's why I showed you that previous Bitcoin example. We can also see the M1, M2 money stock and the CPI all going up, but this is a bit old data. We really need to get the updated data. The key thing here to note is as inflation increases, this is really good for Bitcoin. People need to put their money somewhere when it's getting eroded by inflation. People need to maintain purchasing power. It's important to keep our eye on the metals, and we can see gold and silver coming up. We can also see that the inverse DXY, which generally is a predictor of precious metals, is going in the opposite direction. This means that these spikes in gold and silver, especially gold, are driven by geopolitical risk, i.e. Russia. Masterclass students, you get this in TR23. It's also good to stack and collect probabilities. When we inverse bond prices, we can see that they're very highly correlated with Bitcoin's movement. Now, why do we do this? Because we must understand what's happening with the broader picture. What do we see here? The inverse of bond prices is actually going parabolic. Of course, we expect a retracement, but this is really good for Bitcoin. Masterclass students, this is in LV10. When we look at recession prediction, a lot of people look at the 10-year minus the 2-year. It's very misleading. The 10-year minus the 3-month is the absolute gold standard, and it's the gold standard for many reasons. I cover this off in LV13. What we can see is there's no yield inversion, no yield curve inversion as far as the 10 minus 3-month. In fact, it's 2.123%. The other one, the 10-year minus the 2-year, is the Wall Street version. And what happens is that's used to terrify retail investors, and it's been doing a fantastic job of that. Why do retail investors need to get terrified by Wall Street? Because Wall Street paints a narrative of when people should buy and when they should sell. For example, the narrative here is you should sell. Professionals do not sell on days like today. They're actually buying. But you can realistically only do this when you have the knowledge of how markets work and you have the rules. The rules are critical. And then as we look more globally, we can see that the major indices, the US indices, are retracing, but this is really healthy. And the major indexes all around the world are actually doing positive performance here. Please beware of the scare tactic that is put into the market. News misleads. So what we can see is fear is bottoming out right at the moment. Why is that? Because we're hitting very nice levels of support. We see a very high correlation between aggregated open interest and Bitcoin's price. Getting consistent movements between an indicator and what you're looking at is incredibly important. I've seen so many people on YouTube channels saying, look, the indicator matches here and it matches there and it matches, oh, it doesn't match there and it doesn't match. I won't talk about that. You need to talk about it all. And especially when people look at the 10-year minus the 2-year, what is actually going on now is that there's a lot of non-comparative data. The signals are getting messed up. When I used to lecture my students in statistics at university, what I did was to actually pull different charts from the mainstream press, the mainstream media, and they were distorted unbelievably by the media. Just be aware of this. You need to be able to apply knowledge to them. To the charts, you need to be able to understand. Don't just say, oh, because this news source says so, I'm going to buy that. You need the knowledge or you'll lose money. The whole purpose of the masterclass is to help people to become independent of the market, to be able to tell the story of the news through the charts. That is what professionals do. Professionals pay no attention to the news. They already know what's going on. They predict the news. So, are the markets crashing? No, we can see here Bitcoin is just coming down to a level of support, and it's got multiple levels of support. Can it go lower? It's like saying, well, it went lower there, it went lower there, it can't go any lower here. Of course it can go lower. That's what we actually are banking on. We want it to come down lower. And you say, Ken, why would you want it to come down lower? I don't like this red. I'm freaked out by the red. Actually, when you get the professional mindset, you love the red. Why? Because it puts percentages on your side. I'll just dive in a little bit deeper because it's really important to understand this concept. What you can see here is price moves in waves. This undulation between red and green, etc., is price moving in a wave. A lot of people are not taught about price moving in a wave, and what actually happens is people buy and sell at the wrong times, and it's just an absolute financial tragedy when that happens. Another thing people are not taught is that how percentages work. For example, this percentage was negative 24%, but it was followed by a 38% gain. Just because it comes down 24%, it doesn't go back up 24% to recover that previous high. It goes up much, much more. For example, if the 10-5-10 fund means if you have something at $10, it goes to $5. That's a 50% decrease. But from 5 back to 10 is that a 50% increase? No, it's a 100% increase. And this is why you always want to buy when price is going down. Professionals scale in at a loss. This actually perplexes retail investors and traders. We actually buy at a loss. We're buying right now. And this is increasing a losing position. And you're always taught, oh, don't do that, don't do that. Why not? Because the people who say don't do it are institutional investors and traders. They're doing it. So let's just play this out. Negative 24%, positive 38.7%. What about this one? Negative 25.09% and then positive 32.28%. You literally always can win if you do this. This is only a professional thing. Retail traders never think about doing that. Retail investors don't think about doing it. Retail investors think about hodling. They're told to have diamond hands, to hold on for dear life no matter what price is doing. But when do they lock in their percent increase, their return? Because they have no knowledge of when to sell, they will in all likelihood lock it in at exactly the wrong time when things are starting to actually improve. So we've got an 18.16% return, a 14% gain, an 11.76% loss, followed by a 28.32% gain. And where are we now? We're down 18.66%. Look at these reds, price moving in a wave. This is really important to understand. If you understand that Rule 4, price moves in waves, it's an absolute lifesaver. And then if you combine that with buying on red, which requires a professional mindset, you'll do incredibly well. And you want to have a portion of your portfolio for trading. Now, why is that? Because traders are always buying and selling. But what about the tax implications, Ken? I want to pay less tax. The concept is, it doesn't matter when you sell. What you need to do is to train yourself to sell at the optimal price. Remember how gold was going parabolic, how oil was going parabolic. What did we say? Be careful, it's going to retrace. And then it did. What happens? Hodlers keep on hodling, and they typically buy when they're certain, which is around the top. Traders just don't do this. We're after a percentage return. And we know that if we can turn small percentages every so-called period, and that period is really dependent on what the market can give us. We can take a small amount of money and turn it into a large amount of money. We don't have to focus on holding one thing and going in at one position and holding on for dear life and not knowing when to sell. But you need the knowledge and rules and patience. You need a real wealth perspective, a positive excellence perspective to be able to do this. And that's what we share inside the masterclass. I brought this particular example up a couple of days ago about one masterclass student who bought here and sold here. And look at the price, it's come down again. And this is just now a buy opportunity. When you look, that was a 10% increase from there to there. And that actually made this particular student $3,000. What you actually see is buying and selling is way more preferable to hodling. It's a trader's market, and I believe it will be a trader's market for the next 5 years. This is not a full markup of the chart. It's a cut down version for public consumption, but the concept is you can see these lines actually hold price. You can see this line held price. For example, when the person sold up here, yes, it went up a little bit higher, but we don't care about missing out. We're not like that. We're not trying to time exact bottoms, trying to time exact tops. That's what retail does. We're professional. We just want to participate in the sweet spot of the trade, and it looks like it's becoming sweet again. If you started looking at the overall market in terms of being so red, like this, I hope what you actually see, that red is an incredible advantage to be taken. You want to get in when price comes down, especially if it comes down crazily, unsustainably. These sharp angles will reflect. Look at this one. It reflected perfectly. This one reflected. They are very, very common reflection points, and you want to be involved in that. So what do we see here with Bitcoin? It's hitting a support level. It's got a lot of support all over the place. People calling for Bitcoin to go to 20,000. I just can't see it happening. The markets are inherently strong. And people say, Ken, what about the Fed meeting? What about interest rates? What about tapering? What about? I say forget it. Actually, just look at the charts. Look at these charts. They will tell you the picture, and you have to have the knowledge to understand how to use these charts and what certain things mean. You can't just look at a chart with no knowledge and say, I got it. You need to get the knowledge. I put the masterclass together to share my more than 30 years inside financial markets. There's a lot to understand, and you can, of course, reach out at any stage. What we're seeing here, we're seeing a level of support. Now, this is really, really good stuff because we wanted to participate. We had all our levels waiting to get filled. And when price was going like this, everybody was saying, oh, it's past resistance. Now melt your face off rally, go all in and more. And then what happened? Bang, that happened. That's why professionals don't act like amateur retailers. Being a professional, you need to focus on price moves in a wave. You need to know your support and resistance levels. You need to understand the psychology of the chart. Cryptos are like crazy 2-year-olds, or they can be like teenagers, or they can be middle-aged, or they can be all sorts of things, but they're all pretty volatile in the crypto market. We can see Ethereum has not come down as hard, and we can see that means that there's relative strength in Ethereum versus Bitcoin. We can also see this blue line, that's Bitcoin's gravity. Ethereum is holding up really, really well. Ethereum is very, very powerful, and it's powerful for so many reasons. We can see Binance Coin is coming into a support level. XRP coming into support. We can see Cardano has done really, really well. We were trading Cardano. I was letting the community know down here around the 80-cent mark. I'm leaning into ADA. It's starting to turn around. And that's when it was down there, looking like that. And people say, Ken, what? It's just going to go down and down and down. No, it's not. Because price is always moving in a wave, and we have very specific techniques that we apply as crypto technical analysts. Solana coming into support, and this is looking beautiful. Solana is a really strong project. Luna, Luna is quite interesting. We may see some downward price momentum, but Luna is incredibly strong. Just bear that in mind. AVAX is looking a lot nicer. You really want to get cryptos that are looking at a particular point of time that there's a lot of support underneath them. That is a really good place to buy. We can see Luna is a long way away from support, and Luna can get really spiky. If you're in Luna, just be prepared for a spike down to, for example, around $60. If you can handle that, you can handle Luna. Luna is a little bit crazy from time to time. I actually personally have active trades in Luna, but I understand its volatility. Just please be careful. When you're first getting into the market, I would always suggest that you minimize your risk wherever possible. Always keep the three possibilities in mind. Price can go against you, it can go down, it can go for you, it could go up. This is assuming you're going long. But if you're going short, you're using leverage trading and you will get crushed. It's just a question of when. And that's a nasty lesson to learn, but it happens to everyone. So if it goes sideways, you know what to do. What actually happens with retail thinking? Retail thinking just has one perspective, it's going to the moon, or one perspective, it's going to zero. It's just not like that. Price moves in waves. Price moves in waves is actually rule 4, and it's a really important rule to remember. Please remember rule 4. Another way of thinking about it is like price is always moving up and down, always up and down. It'll hit your targets and it will retrace. If you can keep on thinking about it like this, it's a really good idea. Let's look quickly through Matic. Matic is getting dramatically oversold. Atom also. Rose coming back to support. We can see NEAR has gone very far, but just be careful, NEAR is very spiky. Phantom coming back to support. Doge lost the big news spike. That's why we're really careful about news spikes. It doesn't really matter what you think of a particular crypto. What actually matters is the exponential price action. Crypto is always full of explosions and implosions. Explosions, implosions. Please keep that in mind. We can see LRC exploding up and then retracing. And I said yesterday that I was leaning into Axie Infinity. It's actually overstretched by 72%. This makes a good technical bounce trade. Does it mean it's going to go in our favor? There is no certainty, and I'm not suggesting you get into Axie. You must always do your own research and do what is good for you. I've been doing this for a long time, so from that perspective, I like the look of Axie. Axie is looking really good. Please bear one thing in mind. Fear has not reached the levels that I would have expected it to reach up. We may see more of a negative price movement down in the Nasdaq, and if that happens, Bitcoin's gravity will be impacted. If we actually get that fear spike, the move down, I believe, will get a very sharp retracement like we've seen in previous times. Just bear these in mind. These sharp angles do reflect, and this is quite a sharp angle. We'll continue to look at this throughout time, but remember, these sharp angles reflect. They can go down heavily and come up heavily, literally in a matter of hours. Just keep that in mind. That's why we love these spikes down, but you must have the knowledge. Not all spikes are created equal. If you would like to reach out and contact me directly, my direct message Twitter handle is in the links in the description. And you can also find more details about the masterclass. And there's a lot of different links that I put in here to give you information. I do recommend different exchanges, but please always use spot. Do not use leverage, especially if you're just starting off. There's an incredible depth of information inside the masterclass. Also, one indicator which is very powerful that allows you to realize how strong different altcoins are, and that's really important to do. I hope you found the content useful. Please consider sharing and liking this video and also subscribing to the channel. We'd love to have you as part of our globally extended family. Thank you very much to our moderators. for keeping our community safe from scammers, and to the CTKS ambassadors for mentoring masterclass students, and of course a very big thank you to you for watching and for being part of our global KS family. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the tax software I use, and links to the CryptoTradingKS Masterclass. To validate that you're actually talking to an ambassador, please go into the link in the description, press the Show More button, and you can go to the 80% off link. That will show you the ambassadors there. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care, and see you next time. Bye for now.